Hi folks, it's Aiden CryptoBrip speaking. Welcome to today's Friday webinar. The Fed has raised the interest rates by 25 basis points. And this rate hike might be the last one on the horizon. There is not kind of like a continued speech in the direction of the rate continuing to raising the interest rates, which is something a little bit of a game changer. The game changer has not come through just yet, right? From the Fed side, what we know so far for sure, historically, it's bad bet to fight the Fed. So we're going to talk about this influence, how the 25 basis point rate hike can influence in the short term, in the medium term, and in the long term, the actual markets, including cryptocurrencies. If you're ready to hear this and more, make sure to stay tuned. We're going there right in a second. So that's the news, that's the decision. Welcome again. Friday's webinar, Adrian CryptoBrip speaking straight from Dubai. Beautiful sunny weather, shiny sun, shiny ocean, beautiful sight. New Burj Al Arab, new Burj Khalifa as well. So many beautiful places. Every time I come in Dubai, this is definitely one of the best places in the world to be, one of the safest. Actually, I've seen lots of experiments so that if you leave a bag full of cash, $1 million of cash, somewhere on a bench in the park, in Dubai, and you come to pick it up on the next day, it's still going to be there. That's pretty interesting, right? The culture, the actual business, open-minded environment that you face in here is pretty incredible. So shout out to all the governors in here. I'm not affiliated. I'm not paid to say that. I just enjoy honestly and genuinely being here. And thanks for having me. Shout out to all the Dubai friends, UAE. It's awesome. Also, best love to guys who are watching and tuning in from Europe, from US, from Australia, from all of the beautiful countries up there, from Africa. So many great people from Nigeria. Ladies and gentlemen, this is Friday. This is Friday, fresh after the Wednesday's FOMC decision to raise the interest rates by 25 basis points, right? 25 basis points actually takes us to 5%. The interest rate has matched the long and seen interest rate hike highs, right, of 5%, and this has actually been following the actual expectations, right? Right before the rate hike came to happening, we actually did see this expectations, right, for the 25 basis point rate hike with 86.11% of probability, according to the traders. Expectations, anticipations, and there was little disappointment. There was almost little to nothing disappointment, right, in terms of the disappointment, because many traders follow this so-called heuristic, this rule of thumb, that not necessarily knowing why it works, some people would apply just because it's a little bit of a mental shortcut, right? And it just helps some of us just frame their thoughts better, frame their minds better, and get an action plan that is ready to use without necessarily understanding and diving into deep concepts of why it works. So leaving the fundamental side, leaving the fundamental of philosophical kind of like things aside for why it works, this heuristic is, let me quote it, what often drives the prices higher in the anticipation of the news release, right? So typically what you see is when you have, let's say, this is the timeline, right? What you see is there's a little bit of a kind of like a sloppy, choppy sideways environment. There's a little bit of an anticipation and buying, kind of like people buying this heuristic, buy the rumor, sell the news, similar that you would buy the support and sell the resistance. Nobody knows why it works. Maybe some people will read that in the book or something. However, that's what the majority of people does. What the majority of people do. And here, typically after, right after the FOMC decision, the prices retrace to the previous levels with little effect except for volatility spikes. So what happens is you buy the rumor, the anticipation builds up the demand locally, right, on the event trading day, just like the FOMC or some big presidential statement or whatever that is. And then you see another chop, right? And there is this sell the news that might be a little bit of a discouragement, a little bit of a anticipation, kind of like a bubble burst. Some people really feel discouraged, or they just sell off because there was nothing special in the news release or something, right? So whatever the reason is, it often dumps, right? And it retraces. Back right after, right? So what it does is kind of like just chops around until it comes back to the levels seen before, right? So we're only seeing this increased amplified period of increased risk, of elevated risk, right, of being wrong, because what it does, it basically takes out your stop. You're as a breakout trader, you're as a stop loss trader, trader placing stop loss, you would actually base your stop losses, again, based on some heuristics, rules of thumbs that many people would do, not only because of like triple ATR or through quadruple ATR, some volatility-based filters, some people just base it below the lowest lows or the highest highs of the sudden range, right? Just here before the price action. So what you see is that the stops are taken out, the market ramps up, then the stops are taken out on the bottom side, right? And what it does, it basically chops around, right? It takes out the stops on both sides of the ranges of the channel, and it does nothing but that, right? So there's no technical sense. What it does, it just amplifies the noise. This non-informative kind of like piece of price action that is not necessarily to be used in any direction. It's just directionless. It's random, more or less random, and it's been actually proven over the time that trying to time and bet on the directions in regard to with regard to timing those rate hike decisions or other event trading days, like those buy the rumors, sell the news types of events, it is a coin flip. It is a 50-50 chance, right? So what happens is that if you get it right, if you literally buy and the market goes up, it's not because you're a genuinely the best investor of all time, beating up Warren Buffett, Jesse Livermore, right, or Benjamin Graham, but by literally by tenfold. It's likely because you just got luck, right? Just got a lot of luck, and luck is coming from chance. Chance is something independent. Chance doesn't depend on our skills, right? Chance is external. It just happens. If you flip a coin and you get heads or tails 5 times in a row, it's not because you're a genius. It's because that's the way the luck works, right? That's the chance. The probability decreases over the time if the series of runs like that just is to continue, right? So the probability of you having a run of 10 heads or 10 tails in a row is much lower, geometrically lower compared with let's say 2 heads or 1 head, right? 1 head is 50-50. Then you have 50-50 divided by by 2 basically, right? And it just continues geometrically decrease. So it's pretty interesting. However, there is no statistical edge in that, right? And the magnitude of the price action reaction on event trading then depends on the disparity between the expectations and the actual news. So the expectations were 25 basis points. So that's what we thought, right? So there was no reason to follow through higher. Basically, there was no reason to, as a positive surprise, the markets pricing nicely, right? And as I have been a little bit again of some increased amplified noise that just took us low, it eventually brought us to the levels from before the hike itself, right? So this is pretty interesting for how it works. However, that's the reality. There is no statistical edge in betting on the directions. So if you have, this is actually what we find in the CMT curriculum. And I've recently visited this amazing, excellent 50th anniversary symposium of CMT, where I met all those incredible CMTs and CFAs, all those incredible people. We even had a party, a celebration next to the Jim Cramer's office in New York Stock Exchange, right? Floor that is very, very difficult to get in and to get on. I even had this picture of a buy Bitcoin, flashing it right in front of the New York Stock Exchange desk, and a hammer. That was pretty cool, right? And Larry Williams was taking pictures of that, which is pretty interesting because Larry Williams is literally one of the best living investors of all time, I think, and he's pro Bitcoin. He's bullish on Bitcoin, so that's pretty interesting. But many incredible legends up there, and what we know and what was the overall consensus, I should say, well, consensus is not necessarily always the best concept. The overall agreement, it seems, was that the vast majority of CMTs were polling and were answering that there is a little bit of a sloppy chop, right? The sloppy chop in the market, which amplifies this uncertainty. And amplified uncertainty pushes us as traders, as people, to irrational behaviors, right? To different emotional biases, the different behavioral biases, including the cognitive ones or the emotional ones. The cognitive ones are the ones that we can work on, the ones that we kind of like fail to remember nicely, right? Just because our faulty, blurry memory just plays tricks on us, and we'll basically remember things better than they actually were. All right, or differently that they actually were. We tend to idealize ourselves and our hindsight and our past, right, just to try to defend our ego. That's pretty interesting how all of that works, right? To basically fear the losses. We hate losing, right? This is called loss aversion. And loss aversion bias is an emotional bias, and this is something that we cannot necessarily control. That's imprinted in our body, that's imprinted in our mind, and we can only struggle to to fight the actual effects and implications of that, right? However, by learning about those different behavioral biases, the cognitive ones that you can react to, and the emotional ones that you cannot really react to, however, you can tame it. You can somehow learn different techniques, learn your own behavioral aspects, learn your own behavioral reactions to certain behaviors, right? To certain market price action revelations. And that way, you can learn about yourself. You can learn about how to become a better trader, right? And that is how technical analysis provides us with this excellent toolkit to measure the risk and to help us understand ourselves better and time the market decisions. This is pretty freaking awesome, if you ask me. Right. So how does the interest rate actually impact the markets, at least in the short term? So what we had is we had this a little bit of an anticipation, somewhere towards matching the resistance of 33 for 34,000 kind of like points for Dow Jones Industrials, while the 200-day average continues to incline for the first time since actually 2021, right? So after a year-long bear market and a flattening period throughout, 2022 and 2023, bottoming out in October took us high and very high from high 28,000s all the way up to almost 35,000 points, right? So very significant increase, bottoming pattern, very clear double bottom, nicely confirmed up there with a very decent follow-through, breaking above successfully with a follow-through over 200-day moving average, which eventually took a result and pushed us and continue to let us stay above the 200-day moving average, which represents the primary trend. And this is the primary trend. It's as simple as that. The rising 200-day moving average is a bull market. The declining 200-day moving average is a bear market. And flattening is somewhere of an accumulation or distribution, depending on when it happens, right? When it happens after a series of inclines, this is a accumulation, or this is a distribution pattern most likely going on and some reversal pending. If it's a sideways period going on average following the year-long bear market, this is typically followed by bullish tendencies, right? So it's a bull market. There's no question, and that's not my opinion. I'm just looking at the curve and the primary trend that represents the dominant tendency of the market to persist in one direction, not on one day, not on 5 weeks. It's 200 days. That's a lot of freaking data. And when you see consistency and persistence and following in the one direction of past 200 days of information discounted in price, this is not a coincidence. This is not a coincidence. It's impossible to be coincidental and persist over 200 days, day in, day out, day in, day out. That's what we call trends. This repetition, this repetitiveness is what we call trends, right? This configuration where there's consistency and an actual consecutive movement in one direction. This is what we call a trend, directional movement. And that tends to persist. Hence, this is a bull market, by the way it looks, right? Even though it's an early stage, even though it looks innocent, I wouldn't necessarily, again, just go in and say, hey, yeah, this is the moment you put in all your money, go like there's no tomorrow, just go all in, and so on and so forth. That's not what you want to do. However, what it tells you is that this line represents a bull market, right? There's a little bit of again, sloppy chop here on the Dow Jones Transportation, which kind of like, just doesn't put in a comfortable position from Dow theory perspective, right? Because the lag in transportation not following really the directions of the Dow Jones Industrials is telling us a little bit of a inconsistency in the markets, right? Rejection of the Dow Jones also come through apparent in the S&P 500, right? So the large cap index is basically rejected 4,200 points. Again, it's a little bit on the support area right now near the 4050, right? The 200-day mean support, again, note that it's inclining. This is a bull market for S&P 500, even though it's a little bit, again, not accelerated. It's an early stage. It just has inflected right to the upside. 3970 point approximately, right? People love round numbers, so I would bet that safe bet support is somewhere around 4,000 points, and that might be the potential region that I would expect a little bit of support. We can see some running gap here, some running gap, breakaway gap, if you will. They often work as supports, right? So I would not be surprised that if we get a little bit of a nuke lower, then it may take us into the area of filling the gap right there, closing the window around 4,000 points. That actually would match, not coincidentally, the 200-day moving average area, right, which often is used by traders as this frame of reference for betting certain levels. However, the market is inclining. The average 200-day trend continues to rise, right, steadily, slowly, but steadily. That's what is important, right? So eventually it tells me that this trend is likely going to push us higher, even though there may be a little bit of sloppy chop, right? There might be a little bit of some pullbacks. So I'm not saying it's going to happen next week. There's often the seasonal pattern where you sell and may go away. That may happen, right? And this will also bother other markets, just cryptocurrencies, right? And the main top three performing assets are basically communication services in a green 20% year-to-date return, technology XLK ETF out of the S&P 500 sector 18% or almost 19%. And right after there is consumer discretionary. So we are looking at three top consumer, kind of like, again, cyclical stocks, right? If you have a look, those are the three ones: this consumer discretionary, communication services, and technology. And in a sector rotation model, it's literally right at what's starting the bull market while the economy tumbles. And this is the actual case that we're looking at right now, right? So I would argue that we are starting the new bull market also from the market rotation point of view, right? And this actually matches this nice model of the sector rotation coming with the economy cycle, right? This is pretty interesting. And having a couple of minutes left, right, how it all translates to cryptocurrencies. Well, it's important to understand that the momentum principle will take you to classify the markets based on the strength, right? So it's impossible to analyze Bitcoin without understanding how it is positioned. It's not trading in a vacuum, so it has its own spot among other markets, and spotting the training markets, the ones that are underperforming and outperforming in light of the momentum principle, which tells that outperforming assets will continue to outperform and the underperforming assets will continue to underperform, right? It's important to find a Bitcoin spot right there. And XLK, XLC are still still strong on the relative strength and momentum versus the interception point 100 units created by my great friend Julius de Campanaro, who I also got an honor to meet on this symposium next to Dave Keller and so many other legends. Incredible. And it's still outperforming, right? So it's still in a relative uptrend, and still, even though decreasing the relative momentum, so it's a little bit of a decrease, that's still betting on leading, right? Momentum principle tells you that you want to long strength and short weakness. So you want to be short anything that is up here in the portfolio management perspective, and you want to be long anything that is in here. All right. So this is a setup that is basically confirming the bull market, right? So ever since the year started, again, XLY versus XLP, the consumer discretionary versus consumer staples, it's kind of like a relative strength ratio to understand the risk on versus risk off environment. And we're looking at a very rapid reversal ever since 2023 started. Just have a look at how strong this reversal was, right? There's no coincidence. There was a very strong relative strength reversal and turn, right? Following for above the 200-day moving average with a decent spike. This is not a tradable asset, right, per se. So this is, don't kind of like pay too much attention to those local choppy bars. It's slightly correcting ever since February, right? So this tells me that there is a little bit of stagnancy in terms of like the preference of choice among investors to choose the consumer discretionary versus XLP, right? However, what it tells me that the trend has inflected as well. The 200-day relative trend has changed and shifted the mode, right? And even though it's still declining, it's declining at much lower pace, right? And it's likely to going to catch up as long as we are to continue into 2023, potentially through Q4. This is pretty interesting. And then you also have the energy sector, right, which is the XLE. And the energy sector is basically breaking down. With that being said, the energy getting cheaper is positive because it stops draining so much money out of your pockets, right? Leaving more space and more capital to be invested in financial markets, just like cryptocurrencies. And then miners like decreasing energy prices because it makes their mining business more profitable, right? So this invasion, this another penetration of the 200-day moving average area, or actually the area behind it, below it, is telling me that this is kind of like, again, too frequent to ignore that, right? Which may be just a coincidence, might be also not a coincidence. It might be that there is this decreasing tendency, right, of the market to kind of like continue to weaken this position below the 200-day moving average, suggesting that there is an improving, or should I say pending, market reversal and some sort of like a distribution pattern, right, going on with the double top and so on and so forth. So we'll see. However, we're looking at decreasing continuous lows on the relative strength versus SPX. Again, relative strength ratio is telling me that, and it's often preceding the price, right, that the relative strength is already below the actual lows of March, right? And the price action is yet to catch up. So we'll most likely see a breakdown into the lower parts of 70 points of XLE. This is pretty interesting. And final point we make before moving to cryptocurrencies is that the dollar is still weak, right? There was no pretty much reaction on the FOMC from the FOMC 25 basis point rate hike, to the dollar's price action, and this dollar's price action directly translates to what Bitcoin does, right? Because what Bitcoin does is also priced in dollars. So the stronger the dollar, the weaker the Bitcoin per definition, basically, right? And so observing those long-term dollar trends is helpful in understanding where Bitcoin may actually go. And weakening dollar is positive for Bitcoin because it typically, again, just favors distributing the risk and allocating the capital into risk assets rather than protecting into safe haven dollar currency, which is right now obviously different and changed because of the inflation, which is still high. However, it's decreasing. All right, so having the deepest interest yield curve inversion since 1980s is basically not also good, even though right now we have just seen a spike up, all the to the levels unseen since 2000, right? So it's a little bit of a difference. However, for most of the time we stayed in the area unseen, and the deep depth really unseen since 1980. So it's pretty big thing. So Bitcoin is basically right now trending up, and there is no single doubt about that. This 200-day baseline adaptive moving average by Barbicator Pro is basically what represents the primary bull market, right? It represents the primary bear market when it declines consistently, and it represents bull market when it consistently improves, right? So ever since 2023 January, we were looking at this inflection point, and ever since Bitcoin has been in a very steady bull market. This is pretty clear. And then right now we're looking at a little bit of a medium-term slowdown of this trend. So you may call it, we may expect even some medium-term correction. I don't know. Like, nobody knows the future. Nobody knows what is going to happen, right? However, what we know is that there's been a little bit of a cluster of 2021 lows, right, when Bitcoin was actually trading up there and then matching, those all-time highs breakdowns, all the way to $30,000 to $28,000, then pushing higher above 69, then finding support around 30K, right? Then later rejecting it here. There's a little bit of memory in this area, right? So the price is memory. That's what we do that's what we as technicians believe, right, and recognize. So there is some chance that sell and main go away pattern will work and lead us into Q3 correction, right? Quarterly medium-term correction that is going to take us maybe towards $25,000, maybe even lower. We don't know what's going to happen. However, what we know is that there is this underperforming actual volatility versus the 50-day mean trend. Based on ATR, right? So based on this average true range, which is a measure of volatility. So long story short, we're in the area of previous support that ever since breakdown, has the right to work, the full right to work as a resistance, right? Area, and that's what it showed. So that's what it shows so far. We broke down, however, we broke above, however, the main critical resistance, right? There's no doubt about that the main resistance has been broken. So we're trading about the main resistance in a over a very decent rally and a solid, very reliable bull market, or a bear market shift, right? The bear market inflection into new bull market, a fifth bull market, persistent trend shift that is now providing a little bit of a reference level of reference around $26,000, $25,500, a nice confluence, right? Horizontal level here that price has memory a lot of, and matching the 200-day baseline average from BPRO, Barbicator Pro, right? So this tells us that even though there's a little bit of, again, sloppy chop, fluctuations, some more uncertainty that promotes a loss aversion bias and irrational behavior, we're looking at an overall bullish tendency and a clear trend, persistent pattern for Bitcoin that just is maintained over the time, right? So it's pretty nice, pretty incredible. And well, that is taking us towards the breakout objective of 35,500, right? How does it happen? Well, you take the measured rule movement, right? So basically, those rules often work because we make them work, right? If enough people apply one and the same heuristic of measuring the rule, measuring the movement by connecting the cycle trough and the actual resistance, right, which is 15,500 and 25,500, that gives us this level from support to resistance of this entire accumulation pattern that had been going on of $10,000 size, then naturally let's us assume that the breakout objective is going to be the same kind of like a measured distance of $10,000 out on top of the breakout level. So 35,500 is the potential breakout objective for this accumulation pattern to expect. However, trends tend to persist, and since this is a bull market, I will not be expected anything else than all-time high in some time, especially with increasing fundamental scarcity driven by the halving cycles. And the next halving is next year's April, so it's pretty interesting. I'm not saying this is again an immediate going up and an immediate 5x or an immediate, that it's going to pump right here right now in the 5 seconds. I'm saying that from the long-term standpoint, there is no reason to believe that Bitcoin is actually going to reach anything else than all-time high within the next couple of years. Most likely towards or right after the halving. There might be a little bit of sloppy chop again on the way, some corrections, some medium-term corrections. It's definitely safe to expect that some underperforming volatility may tell us that this trend that has lasted since 15,500 may have expired a little bit, right? We definitely want to see that this breakout confirmation is on elevated volatility. So far, we're looking at this volatility that continues to underperform, so which tells me that there's a chance of a continued correction, maybe towards 22, maybe towards $25,000. Who knows? 25,500 is likely going to work as a nice frame of reference, some anchor to wrap traders' minds around it, which increases the chances that it's going to work as a support actually. Right, so long story short, I'm expecting breakout objective at 35,500 to be met eventually, probably towards October, I would guess. Maybe I'm wrong, we'll see. Right, maybe it's going to happen in May, who knows? April and May are very strong seasonal patterns for Bitcoin as well, so you may want to not trade the long-term seasonal patterns that are there. However, June, July, August, September are typically very slow, very choppy, and very non-essential, very weak. So I would not place much hopes in reaching this breakout objective anything else than May or October, I'd say. So we'll see about that, right? Otherwise, correction is right now there is a serious risk of correction taking us lower towards 25, maybe lower, right? Since the volatility is underperforming heavily and steadily, so there's this chance. There is this clear slowdown and exhaustion. We'll see about that. However, it doesn't negate, even if we get to 25 or lower, this would make a perfect textbook scenario. If we get there, that would make a perfect buyback scenario for reaching 35,500 later this year. Hope it makes sense and it clarifies why 33,500 is possible. So far, my trading system has got me out on a stop loss position. I got stopped with a loss a little bit higher than expected at first. So far, Bitcoin is on the adaptive ATR basis, kind of like custom designed Barbicator Pro that you can get on our website, right? You can get this my private trading system, and it made me $440,000 in adjusted trades. Some many minor losses. However, the big wins is actually what compensates all the minor losses, right? The breakout attempt over the high time frame trailer stop 29,323 is so far still intact. The bearish tendency, the bearish turnover has not been diminished just yet. So I would say until called differently, the bearish tendency locally prevails, and until the Bitcoin closes above this high time frame trailer stop to invalidate the bears, there is a chance of an implosion, of some local correction, right? Maybe matching the lows of the range towards $26,000. Maybe it's going to go towards 25. We never know. 25 is giving you many reasons to go and place your bet somewhere between 25 and 26, right? And that might be the chance as long as we stay below 29,323. So to put it all together, right, you might want to be aware that 35,500 is a definitely serious place to look at from a technical breakup perspective, right? Otherwise, we are performing a little bit of a local correction. We'll see how it goes. Do not give up on your hopes just yet. Prepare for some slower Q3, maybe to regain all the new highs with double power, and towards the halving in Q4, right? Heading into Q4, getting closer to the halving next year in April. That is what typically drives the scarcity up, demands the prices higher, and bids up the prices, encouraging traders to buy in. That's all. All the best, love, and greetings from Dubai. God bless you all. See you around, and expect the best. Be ready for the worst. God bless you. See you around. Bye-bye.